Welcome back everybody to another market day, but this time we are now breaking it down into smaller sections. So right now this is the Nasdaq edition of market day, where we're going to be breaking down what happened during the day to the Nasdaq. All right, I already did a video on Tesla in particular, and now we are moving along and moving into Tesla. I am your designated Inquirer. My name is Axel, and today is 9/15 of 2020. Welcome. Now, let's zero in on the 5-minute and take a look at basically what happened today. According to this, we basically had a very flat day. So if we take a look at the daily chart real quick, if we go over here, this shows a movement upward. Let's take a look at that 5-minute again. Let me take a quick look. This is the open. This is the open. Okay, there was a move upward. Okay, all right, there was a move upward. All right, so let's take a look at the daily chart real quick. Let's see the shape of the... Okay. There was some wick on the top and the bottom, kind of indecisive a little bit, but overall had good strength. We did not top this top right here, which is a previous high, a local high, a lower high. If we do turn around here and continue on lower, we could continue on to a lower low. Okay, it is possible because we did end up making a lower low here. Or we could end up like we did on the last time around, where we had basically created a lower low here, but then decided to make a higher high for no apparent reason. Do we have some things to our favor here? Maybe, in terms of it moving to the downside, okay? Because to my favor, the way I see it, statistically speaking, the way that this market can go is to the downside at the moment. So when I say to our favor, right now I am talking about to the downside. Now let's see here. All right, so we have basically the same amount of volume. Okay, we have the same amount of volume. We have some dips. Let's take a look at what the VIX did alongside it. We're gonna go ahead and add study, compare with. I'm gonna go ahead and compare with the VIX quick. VIX. All right, the VIX, here it is. All right, so when the VIX was going up, clearly this was going down. The VIX was going up, it was going down, but this right here was a little bit higher, and yet this was a little higher. So what's the deal there? What happened? Well, and here, when it finally went up a little further, it went down a little bit further. So here the trend was good, here was not so good, and in the middle here was a little exacerbated to the negative side. But what was happening? Why was this the case? Well, a better comparison would be to take a look at the bond, the 20-year bond, okay? On the 20-year bond, what we do have is probably a better representation of what was going on, because here, the higher it got, here's a little strange, because the higher it got, the higher this got, okay? And when it came down lower, this should have gone significantly higher, but it did not. Not up until here. When it did drop down, it was down. Let's take a look at that real quick. We're gonna go ahead and remove that. Yes, let's take a look at that independently real quick. TLT, we're taking a look at the 20-year bond as far as this relates to bond price. Okay, so when you're looking at this, it relates to bond price. Okay, so at the beginning of the day compared with yesterday, we did start off lower. Overnight we did hit some lows, which we did go ahead and revisit the day before. From here to the close, we did get a drop of about 0.21%, okay, which is not a lot, but a drop of about 0.5% or so is more significant, which was about here. Okay, so the reason maybe why we ended up seeing an increase here, because it was still generally lower than yesterday, and so we did see a pop to the upside. later on down the road, maybe it was then in relation, the money found its nest, basically equities and where to sit in, and from there changes to the overall money pool, or the liquid amount of money in the environment. Those changes affected the direction of the stock market afterward. At the beginning, we were basically seeing an adjustment to the overall change in the money supply, and then later on in the day, the smaller changes within the money supply were the ones that were actively changing the market. I think, as far as I'm looking at it, that's the way it looks to me. It overall did kind of stay flat. It only went down basically the same amount from which we opened, which was about negative 0.24. Though it is important to take into account that during that time, okay, there was some pretty drastic movements, namely here, okay. During the time where that poll came out, the bond did see an increase to the upside of about 0.32. Okay, so to have a movement within that 45 minutes or so of about a third of a percent is kind of significant. Okay, now we have not revisited these prices up here yet. Okay, but we've breached this level here. Okay, we went down to a lower level, and at each step it's been kind of holding its own. All right, there was a drop in the last bit of the day, okay, but we are kind of holding this particular level, so this does seem to be the next support level till we work our way back up or not, considering. But why do I say that? Because the Fed's still holding rates at record lows. Okay, the bond sale today of the 20-year did do remarkably well in terms of being able to seek a higher price, which dropped the yield down. And so that's more or less going to continue. Tomorrow, the reason why this may have dropped off is that either tomorrow or the next day, I think it's tomorrow, the FOMC, the Fed, basically speaks about whether or not they are going to be doing curve control. Okay, whether or not they're going to be keeping, if I can go here, let me open this back up again. You know, I will do that at a later point in time when I have it ready. I do not have it ready at the moment, but basically there is a spread between basically 3-month, 6-month, year, 2-year, 5-year, 10-year, 20 and 30. Okay, those are all different variations of bonds, treasury bonds, that are generally for sale. There isn't usually something old more than 30 years because, well, people's time horizons don't usually last that long in terms of being in a market or not, right? Holding something to maturity, 30 years is a very long time. And our lifetimes are not long enough for us to be contemplating investment timelines longer than that. Unless you are a company that can live longer than a lifetime. But even then, sometimes a company doesn't do that. In any case, I'm digressing. In any case, along those different types of bonds, there is generally a set interest rate along them. The longest one can give the highest interest rate. So there's generally a curve. What pinning curve control would mean is that the Fed is actively applying a shape to that curve. There is currently a shape to that curve at the moment that is basically reflects the difference in risk along those time frames. And so far it's pretty much maintained its shape, unlike about a year ago when we did see what was called an inversion of the yield curve. That is not happening currently, and so there is no, that's why Stephen Van Meter says there is no necessity for yield curve control. And so tomorrow, more than likely, we will see no yield curve control. And when that happens, we will most likely see further interest in bonds that they're not going to be sold off to reach a higher interest rate and or if necessary, because it's not necessary. They find it that it's not necessary, because if it was inverted or if it was kind of flat, then what the Fed could do is it could buy some, sell others, and it would alter the curve to reflect the shape that it wants. But because it's already basically in a shape that's roughly acceptable by most banks, financial institutions, and central banks, there is no need to do anything. And so this shift right now to the lower side is probably not necessary. It's probably going to rise again in terms of bond prices. I'm thinking. I'm still not an expert in bonds the way Steven Van Meter is, but those are my thoughts. And maybe you guys can elaborate, and maybe you guys can either confirm and or reject my thoughts on this, and your comments would be very much welcome. As I am a burgeoning acolyte of Mr. Bond King, Sir Steven Van Meter. In any case, that was basically what was going on today. Also, Apple is went and announced basically a watch and a couple of other items. I think it was like a tablet, but it did not announce the iPhone today. So we did see a drop in Apple, but that will be for another time. But this has been your market wrap up for Nasdaq. I have been your designated Inquirer Axel, and if you guys did like this video, etc., please go ahead and like and subscribe and share it with your friends if you think they need to see this also. But yeah, I hope you guys like this format. Let me know if you guys did. And until next time, stay safe, stay healthy, and yeah, take care. Bye.